I'm here with Jim Cramer, who has some thoughts on oil and this supposed glut. Jim, you've been writing about that.
Right. I mean, look, I think a lot of people should recognize that we've been importing a lot of oil. So if there's really a glut, why are we bothering to import? I think that's important. I think that people should recognize that 43 is the key level. If it holds 43, the stocks will bounce. If it doesn't, the stocks will keep selling off. We own a bunch of them for action alert. We've not been bought. We bought a little bit small when they were lower. But understand that 43 is the fulcrum level. Exxon and Chevron's quarters were terrible. They were just terrible, and I think that's what that, plus the fact that Iran said over the weekend they can pump 1 million barrels a day in addition 1 month after the treaty. So just be aware, everything looks bad, but the glut itself is not as big as you think.
So Jim, tell me about some of the stocks that you own and why they're going to fare a little bit better.
Okay, well look, EOG we think is just it's the best growth of these. Occidental has the best balance sheet, so of the ones that are somewhat levered to oil, and it's got a good dividend. And ETP, we need more pipelines. So the idea that that should be going down really is kind of untrue. We got to build more pipelines. Marathon's more questionable. I mean, Marathon is basically a company that's doing okay, but is a likely takeover target. And okay, I think, is good enough in this case, because if oil bounces, you'll want to be in it. But again, we have not made this line in the sand. We bought some, and we'll probably buy some lower. It's just, I think that this is a group that represents good value. If you're willing to see through what Iran does and see through the fact that if Europe picks up and if America picks up, and both of them are doing that, then you're going to see the glut disappear.
Jim Cramer, thanks as always. I'm Rhonda Schaffler for TheStreet.